Markets are under pressure. I think this is the environment to look for the best defensive stocks out there for the month of September and into Q4. Let's get to it. All right, so the reason I want to be defensive is because the big money index, right, which is measuring the big volumes that go in and out of stocks. Look, we went overbought August 17th, August 18th, and then since then, the BMI has started to fall. And if you've been following some of our research at MAPsignals.com, you'll know that we have been telling you that once that BMI falls out of overbought, look for some pressure in the market. And whenever it falls below 75%, after being overbought, we tend to see lower market prices over the near term. Again, you can see this in our stock buys and sells, right? Lots of buying. This was in August, right? We went overbought. Now we're starting to see those sellers come in. So this could be an opportunity to get a little bit defensive. There are some high quality stocks out there. Let's go ahead and look at our first one. As we get defensive, let's look at some of the strongest performing groups in the market. These are some of the opportunities that we're going to be looking at today. We're going to look into the energy patch, right? We know that energy prices are elevated and so are their stock prices. I think that's where the earnings are going to be over the next few months. Also, we're going to be looking in the staples sector, right? No matter what happens, people need staples, right? They need food, they need products, right? Those are going to be great defensive types of areas in this environment. Also, we're going to look in healthcare and we're also going to look in financials. So look, if you like this type of unique content, make sure to like and subscribe to our YouTube channel. And always remember, none of this is personalized advice of any kind. We just want to make you a better investor. Let's get to some stocks. So the number one defensive stock that I'm going to be looking at is Hostess Brands. The ticker is TWNK. Stock trades right around $23. And again, it's a staples company, iconic brands, Twinkies, Ding Dongs, cupcakes, you name it, right? It makes you feel good no matter what the economy or the climate is for the market. Money does find its way into staples companies. And also, if we look at the shares, lots of big money has been going into this stock over the past year. That means that volumes were increasing as the price is increasing, very strong uptrend. We also know that this is a top ranked stock by these blue signals. That means that on these given weeks, it was a top 20 performer. And look, we want to stack the odds in our favor whenever we're looking for defensive opportunities. Let's look at a couple of fundamentals that stick out to me right now. The 1-year sales growth is positive double digits, 11.6%. Also, I like to look what are the growth estimates for EPS. The 1 year, this is at 15.4%. So it's again, another positive, another feather in the bull's cap. Forward PE is a little elevated at 23.8 times, but not too crazy. It's a staples company, right? And then if we look at the technicals, lots of good over here. One that I really like is the stock is above its 50, 100, and 200 day moving average. I'll leave you with a couple of other things. It's got a free cash flow of $142 million. And look, if you're not an investor and you're a trader, where can you use a potential stop? If the stock does break below 21, maybe you could reduce your risk. Let's go to the next stock. For the number 2 defensive name that I am looking at, it is McKesson Corporation. Healthcare name, right? We know that healthcare is very defensive. Stock price is right around $360. And look, this company does a lot in terms of prescriptions. They do stuff with pharmacies, but more importantly, it came on my radar because the big money has been going into this name in a very big way over the past year. So look, that's a lot of green, a little bit of red here, but you know what? Big money is still finding its way into the stock. Also, we can see that it is a high quality name, at least recently. So let's go ahead and look at some of the fundamentals here. The 1-year sales growth is 10.8%. Double digits is always attractive. They're expected to grow their EPS 6.3%. It's another positive. Now, the forward PE is below the market at 14.9. So again, on the cheaper side, it's healthcare, it's working. It seems to be a good defensive play. And then if we look at some of the technicals, we've got some really strong signals. It trades near its 12-week high and its 52-week high. So we're going to give it good technical scores there. Additionally, I would bring to your attention, the stock has free cash flow of $4.4 billion. That's with a B. Additionally, it does have a forward yield of 0.6%. So it's not a big yield, but we will take what we can get. The number 3 defensive area I'm going to be looking at is obviously energy, right? That is where the earnings have been flowing. Devon Energy has been on my radar, and I'll show you why. Stock ticker is DVN, and the stock price is right around $70. Big oil and gas name in the US. Relentless big money has been going into this name over the past year. That's dozens and dozens of buy signals, big volumes as the price explodes higher. Now, obviously, the stock has been sold over the past couple of months. The market went oversold, everything got oversold, but we're starting to see that leadership beginning to show itself again. That's very positive. And we can see that this is a fundamentally high scoring stock by these blue signals. Let's check out the fundamentals. Now, we know that elevated oil prices has been something of recent over the past year. So the 1-year sales growth of 194%, it's not going to keep that rate going forward. However, we do expect that energy prices are going to stay elevated with supply chain issues, supply disruption issues, I should say, as well, and also the war. But the 1-year EPS growth is still positive for this name, according to FactSet, with 6.6% growth. It's very positive. And then if we look over here on the technicals, I love that this stock is above its 50, 100, and 200-day moving average. Lastly, I'm going to leave you with, it has free cash flow of just under $2.9 billion. That is with a B. Also, it has a forward yield of 6.7%. Okay, people love yield, especially when markets are as volatile as they have been recently. If you are a trader, right, you're not an investor, I would look at the $60 level. If it falls below that, maybe you could reassess your risk. But I think this has a very good near-term trajectory, liking the energy sector. So for the number 4 defensive stock, this is one that's not on a lot of people's radar, and is LPL Financial. The ticker is LPLA. And the previous close is right around $220. I really like wealth management right now, because whenever the times get tough, a lot of people focus on the long term and they move their assets into these wealth managers where they grow their AUM. This company makes a fee on AUM, and that's why I think it's a great play right now when markets get tough. But also, look at the shares. You see a lot of green, right? A lot of big money has been going into this name. Look at all of the top 20 appearances. That is a lot. Just tells you that this is a fundamentally strong company. Let's look at a couple of those checks right now. The 3-year sales growth is 14.8%. Double digits is what we like to see. They're expected to grow their EPS 59%. It does have a forward PE of 21.5, which is more than the market right now. However, it just has a lot of good things going for it. Additionally, when we look at the technicals, very strong. Last buy signal was August 9th. It trades near its 12-week high and its 52-week high. So it's going to get good scores across the board there. If we look at a couple of other things, $248 million in free cash flow. It also has a forward yield of 0.5, so that's not a ton, but we'll take what we can get. And then if you are a trader, right, you're not an investor, if this stock falls below 205, you might want to reassess your risk. But again, I think that the fundamentals check out, the technicals check out. It is a defensive name in my opinion. My final defensive stock that I'm looking at is Archer-Daniels-Midland Company. This is ticker ADM. Stock price is right around $85, and it is a seeds, right? You start thinking about commodities, you start thinking about barley, corn, wheat, you name it. Archer-Daniels is one of those producers. And this came on my radar. Why? Because it's had a lot of green going into it, right? That's the stairway to heaven. Now, obviously, just like many stocks, as I showed you earlier, lots of selling happened in late June, early July, but I do like the uptrend that we're seeing recently. We also know that it's a high quality stock because of these blue signals, but let's check on the fundamentals. 1-year sales growth, 32%. That's outstanding. If I had to ding it, the 1-year EPS growth estimate of a negative 8.2%, that's not what you want to see. However, if we see elevated commodities continue, Archer is going to participate in that. Now, the forward PE Only 12.6. All right, that's not that bad. That's very cheap in this market. If we look at some of the technicals, last buy signal was back in April, so it's going to get a poor grade for that. However, I'm going to give it a good score for its 12-week high of 91 stocks right near there. And also it's above its 50, 100, and 200-day moving average. Last but not least, it's got a forward yield of 1.9%. Yield is working in this tape. It's got free cash flow. Get this, $5.4 billion, right? Very profitable company right now. And if you are a trader and you're saying, look, where do I need to manage my risk? If the stock falls below 80, right around that $79 range, you could reassess your risk. But I think this is a smart play given what's going on in the world right now. Very defensive. Thanks for giving me your time as I show you some of the best defensive opportunities that I can find in the market. Look, I hope you guys love data as much as I do. If you like this type of content, like and subscribe to our YouTube channel. Also, please remember, none of this is personalized advice of any kind. You got to do your own research. And you know what? Always remember, think long term. That's how you win with stocks. I'll see you next time.